staying on the gas pedal as much as we can responsibly do is really what we talk a lot about.
Every growth company in its life cycle reaches a point where they have to, trade off between optimizing for growth and optimizing for the bottom line and earnings. And, from your perspective, given that you're at that decision point or, point in your trajectory right now, how should investors think about that?
This is a conversation that Vitaly and I have a lot. I mean, he's a good counterbalance to my aggressive acquisition strategy. And, my view on this is, all the signals that I have from a growth standpoint, from an acquisition standpoint, would be to continue to accelerate and grab that market share. Because if you don't do that, you will always be stuck in this cycle. You will always be paying the high cost of customer acquisition. And because we really do have some of these advantages of first mover, being the largest, really having these strategic partnerships behind us that really point to we are the brand, the only brand. It's our duty to really go take advantage of that, because we will hit this tipping point where that work and that built up equity into the marketing engine will start to pay off in more profitable years and quarters. And that's really what we're staying focused on is, we want to be disciplined and, keep in an infinite runway for the most part. But at the same time, we are thinking a lot about, market share and really taking advantage of the opportunities that are in front of us and not pulling back, to save, a few dollars. And the reality is this is a really big market. And I feel like we're really only getting started, and we've figured a lot out to this point, and we've really bucked a lot of the trends. And I don't want to say it's getting easier, but you do feel the momentum. You do feel that we are getting more efficient, and we're able to reinvest in ways that we hadn't before. And I would say that's really, from a strategic standpoint, is staying on the gas pedal as much as we can responsibly do is really what we talk a lot about.
A little bit here. Look, while Josh's aggressive strategy is what's needed for the market share gain, we're always in a communication. We're always in a forecasting mode. Every single month, we make sure we understand where we are in that cycle, where we have the cash availability, where we have, in 2025, we have a sizable amount of warrants that could come in to convert those warrants into sort of a cash financing for us. And so it's a delicate balance. It's always moving. It's always a moving target, but it is a conscious, strategic, thoughtful approach that the team is taking here, both on Josh's and my part. So we're not just growing at all costs. It is about growing at the fastest pace we can afford to grow. Luckily for us, 2025 has shaped in a way that we've penetrated a lot of these threshold levels with a bunch of our vendors, where we can start using our volume and our scale is now a lever to, to produce some cost reductions. And if you think about it, it is a small, fairly not complicated product from the perspective of when we ship it out to the customer receiving it. But the process starts at manufacturing, packaging, logistics, putting it to the warehouse, fulfilling it, payment processing. And all these levers, all these cost points have provided us with an opportunity to now really focus on get the most of the revenue we can. And 2025, what I can say from my perspective, is not going to be just about continuing the growth, which is what Josh is doing, but it's also going to be about finding efficiencies and driving the EBITDA. I wouldn't necessarily say profitability, but driving EBITDA efficiency. We're really going to be focused this year on making EBITDA as a percentage of sales more priority. We're studying all these elements right now to see how much of a contribution they're going to be able to provide for us. That's why it's a little hard for us to come up with a definitive number. As a growing company, when you grow, when you start scaling up at 60 to 80% year over year, there's just a lot of things that need to be taken into account. So it's hard to predict exactly what is going to be coming out at the end of the year, especially with Q4 being such a big, proportionally speaking, quarter for us. But I feel very comfortable that now we've done the groundwork in 2024. 2025 is going to be a year where we can go back and reap the rewards of the scale that we've achieved in 2024. So we'll still be able to do a decent amount of growth this year while simultaneously focusing on getting more efficient and getting more profitable. While 2026 is certainly going to be a year where we're going to be at a scale where we should be very comfortable at looking at maybe the profitability and growth from there.